I accidentally just canceled my live stream, so I'm back at it. Hey Jay, how's it going? I'm into looking into it. I have not done any work on ASOS though. Have you looked into it at all? Very curious. It's always interesting when a fashion or retail type company gets the attention of investors like Nick Sleep. It's definitely one of those companies that I want to dig into further. I just haven't put in any of the effort yet. But yeah, if Nick Sleep has any position in any company, then that's one that I'm definitely going to be interested in. I really like the fact that it's a relatively new position for him. So from a cloning perspective, that's a really useful data point for me. What else is on your radar, Jay? Do you have any other companies that you are looking into? It's an interesting question. Hi, Cole. I don't know if I have a preference. Are those two stock tickers that that you're asking about there? Maybe I can bring up something about ASOS. Do you have any thoughtful write-up or anything that you've found on ASOS? That would be wonderful if you would share that with me at some point. I haven't done much digging. Maybe there's something on Value Investors Club about ASOS. It does look like the shares have been having a bit of difficulty. A bit of difficulty in relation to their past performance, but that doesn't necessarily reflect the future of the company, of course. Do I think the scale economy shared idea is still as powerful for ASOS as it was for Amazon? You feel that the genie is kind of out of the bottle? Too many companies trying to do it. Okay, Hamish, are you talking about Hamish Hoder? He's another YouTube finance YouTuber. Yeah, well, to be honest, I don't know anything about ASOS's business model other than they're a fashion company. So, I mean, it's very possible that that framework is at play in this company, but I really don't know enough about it to make that sort of evaluation. And in fact, I don't know how easy it was at the time to identify Amazon as a company with scale economy shared, or Costco with scale economy shared either. And I think the idea that the knowledge is out there, or the genie is out of the bottle, as you put it. Having the knowledge is one thing, and then being able to execute and apply is another thing. So I would guess that Amazon would have been in a very different place without Jeff Bezos and the wonderful management team that was there at the time. They must have executed to perfection to get Amazon to the scale that it is today. And those are just a few thoughts I have about that. So I don't know anything about the structure of ASOS or the management. And I do know that the CEO recently just left, and that might be causing some turmoil, short term or long term. I'm not sure in the stock price, but that is something to think about for sure, especially when it comes to retail, because being kind of the low cost producer, well, or provider in the case of Costco or Amazon, is really important. Hey, Game Theory, yeah. I had such fun last time talking with you that I decided to hop back on board. And Jay, Amazon had 10 years of building with no competition. That's absolutely right. That is, the first mover advantage isn't always an advantage, but in this case, as you say, they didn't have much competition. They were able to get to that scale before others sort of tried to eat away at their market share, and they still don't have complete 100% market share or anything like that. There's still the likes of Walmart and other companies like that, but there is a case where in some cases these leads do erode. And I would say maybe the airline industry is a good example where even if you try that scale economy share, the economics of that overall industry can only really go down. The cost structure can only go up. So that's true. I wonder who ASOS's competitors are. Is Amazon a competitor of ASOS? Do you know that? Because I'm really I don't know much about ASOS. So yeah, and one way to kind of build their moat is through scale. And if they're competing all the way up while building their scale, then they won't have much of an advantage over another company who can equally do the same thing. Sure, Game Theory, go ahead. Ask away about Alibaba. I mean, you may not have the answers, and I may not have the answers, but I'll try to give my best shot here. Okay, so ASOS has a lot of fashion e-commerce competition. It's already fragmented. Okay. So I wonder if the brand, I don't know about in the United States. I've never heard of this company. It's listed on the London Stock Exchange, so maybe it is more popular there. But a brand does not always mean that you have a moat. Brand recognition. Brands go out of fashion all the time. For instance, Gap. So we could also maybe think about how big the addressable market is for ASOS's specific product. One of the reasons why Amazon is so powerful actually is because of their distribution network. So maybe ASOS has some advantage there that maybe we're not familiar with. That's going to be able to keep them as a low-cost provider. But yeah, I would definitely have to look into the financials and see a little bit more. Maybe find a nice write-up on that company. But yeah, it sounds like a really hard business to sort of win out in. So, but Nick Sleep was willing to bet there, so maybe there's something there. Check out CURN, Future Multi-Bagger. Okay, let me quickly, I'm gonna pull it up in my browser, and maybe I'll cover that in a video at a later time. It's a foreign currency exchange company. Okay, it's a tiny company, less than 100 million Canadian dollars. So that definitely piques my interest. I will certainly look into that one and probably post a video in the future. Thank you for that idea. Financial services companies can have mouth-watering returns on equity. So that's definitely potentially one that I don't know if it's in my circle of competence, but I'll at least look into it. Thanks. Tim, you ask, have I bought into ASOS? And the answer is no, I have not bought into it. I know Brad Kellner, the stock compounder, which I'm sure many of you are familiar with his YouTube channel. He posted a video a while back saying that you can call the international trade desk at Fidelity and you can buy into ASOS. However, I have not taken those steps because I've only taken a surface level look at the company. And Pabrai, of course, is invested in it. That's the reason why we all know about this company. And I think the probability of just blindly following into the company and it doing well is potentially high, but I have a problem with doing any blind coattailing cloning like that. I have not yet found any of their financial shareholder letters or anything like that in English that was easily accessible. And I don't know how much I can trust Google Translate, but that's something that would kind of be a prerequisite for me, because Pabrai has all the glowing things in the world to say about the management team, but I of course don't know anything, necessarily about that, and it's hard to glean much of that information from their financials. So, but according to what I gathered was his original thesis, it still probably is a good deal as far as margin of safety is concerned. Game Theory asks, why are Bob's margins, gross and operating, going down from a few years at around 65% GM to about 39%? Well, I don't think I have the answer to that question. I would assume that it's because of competition, but it also could be from increased expenses. I'm just looking at it real quick. So the thing with Alibaba is they on the high end and the low end, and even in the middle with Pinduoduo and JD.com and all these other competitors. So it's kind of the natural state of things that their margins are potentially going to decrease as entrants come into the space, but that doesn't mean that there isn't room for all of these competitors. And for an e-commerce platform, which, for instance, back in 2012, they had about 68% gross margins. That's a ridiculously high. That's more of the software gross margins, which, Alibaba is more of a software business, especially at that time, being e-commerce less directly compared to Amazon. Yeah. It could be a concern going forward. I think that was implicit in that, but I think there are other areas of growth that are just they haven't even turned on yet. So, for instance, the cloud is the biggest area where I think, and Moats Pabrai has said that is going to be a huge source of growth for the company in the future. It's unfair to compare it to Amazon, AWS yet, but I've seen valuations of AWS as much as $500 billion as a company right now. So their e-commerce business is strong, and they have captive networks for their Taobao and Tmall apps. Plus, they have a bunch of other upshot opportunities to kind of increase those margins. But another thing to note is if you do look at companies like maybe even PayPal or Amazon, their margins might not be that spectacular, but we know how dominant those businesses are anyway. Those are just some spitballing thoughts there, game theory, but thanks for the question. Let's see. Tim, have you heard that Monish Pabrai bought 3 more Turkish companies? Do you know which 3 he bought? I have not heard that. That's that doesn't surprise me, though, the way he's raving about investing in Turkey and how it's his perfect market because of the short-term mindset of all the investors, or should I say traders there. I have no idea what they are, but did you hear that from a recent interview or something? Did he post about it? If you could let me know, I'd love to see that interview if you've seen one. Interesting little tidbit there. Jay, back on ASOS, they sell all brands and they have logistics. Value-wise, it's a good price. And I would bet, especially since the price has gone down recently, possibly due to the CEO departing. So that's definitely a company I'm interested in looking more into. And if that logistics network is strong, and if it's operated by themselves and they own it from factory to or from warehouse to final mile doorstep, then that's something that could be really a powerful network for them. Gregory, I can ask questions here. Yeah, you can ask questions, sure. I would say drink water. I'm not a doctor, though, so I can't really offer any advice on that front. Sorry, if you're being serious. Jerry, hey Jerry, how you doing? What are the chances Berkshire buys some Chinese businesses like Alibaba? I would say pretty low. Warren Buffett has said in the past that he likes to jump over 1-foot hurdles, not 7-foot hurdles. And as time goes on, it might be looking like Alibaba is going to be a higher and higher hurdle. I think Warren Buffett's number one goal, and this has been his goal since he's reached financial independence, is that rule number one is don't lose money. And there are probably just too many ways that he sees that he could actually permanently lose money here. So, I mean, yeah, I would think it's more likely that he would buy more Amazon stock than he would Alibaba, or maybe even Google, Facebook, things like that. American Titans. Munger is a little bit rogue on that front. His approach to things are a little bit different than Warren. So, but I think the value investing community's cumulative minds would explode if Buffett actually bought Alibaba for the Berkshire Hathaway portfolio. It'd be nice to see. Warren is noting Alibaba's been investing in the cloud infrastructure, which has high capital expenditures, and that's absolutely right. And along with that, there would be research and development costs as well, marketing costs, things of that nature that would tend to decrease the margins for their business. But there's going to be a continuously big upfront cost for bringing more and more servers online. But it's pretty much pure profit after that. And theoretically, there should be some lock-in and some switching costs once you're with the Alibaba system, because then they offer a bunch of different services on top of just the server storage. There's elastic computing, things of that nature that are pretty much essential for your business if you have any cloud presence whatsoever. And then once you're in there, the pricing power is going to be immeasurable for Alibaba. Hopefully, that's the hope. Let's see. private machinery. You ask, what is happening with Alibaba? Hey man, wouldn't we all like to know? But I think it's a pretty classic case of people being concerned with the regulations and the government environment in China. It's a very uncomfortable place to put your money, especially if you've lost it recently by investing in China. But in my opinion, the business is going to continue to grow, as we were just talking about with the cloud. I can't predict the future, but I think that the expendable income in China is going to increase, which should hopefully help Alibaba in the long run as well, and help its competitors. But Alibaba doesn't need to be the only player in China to do well as a company. So, but yeah, do I think it will reach $500? Yes. But do I know when? No. And do I have any certainty that will happen? No. But I think that's definitely within the realm of possibility, especially depending on the success of the cloud business. So we'll see. I mean, it could go to zero. That would suck. But yeah, I think it definitely has the potential to get there. John says, as a value investor, we are always looking for bargains. I came to think that we should be equally attentive to very overvalued stocks, as much as I'd like to hold a business forever. So the follow-up is, what do you think about selling overvalued stocks, even if you'd preferably hold it forever? Yeah, that's something. So the selling part, I was actually going to make a video about this pretty soon, about the selling aspect, because that's a really tough decision. I mean, it's hard to value the business, it's hard to get to know the business, and it's also hard to hold the business, and it's hard to sell it as well. I think I really like the simplicity of the framework that Nick Sleep has taught me, which is, unless it gets egregiously overvalued. So say I've got a company like Microsoft trading at 80 times earnings or 100 times earnings. Maybe that's getting into egregious territory where the opportunity cost of holding that company is going to be a little bit too high, and maybe my capital would be best laid out in another company. But say I have shares of Apple and they're trading at 40 times earnings or something. That doesn't sound egregious to me, because it's one of the best companies in the world. So that's sort of the approach that I'm trying to take. And if I did own those companies, and I would probably likely sell it, but still keep a small position in the company. I do have a really hard time letting go of these darlings that I like as companies, even though, the rational thing would be to completely cut at a specific point. But you never know. So I want to keep the winners riding. So it's that egregious price point that I'm looking for to start considering about selling. Let's see. Frank and Tom tend to present discounted cash flow analyses when they post a valuation video. But as a reader of Bruce Greenwald, we know DCF is ridiculous. Do you follow Bruce's approach instead? Well, I would say that DCF is just a ballpark estimate. So yes, it can be ridiculous. The DCF is only going to be as good as the inputs, and the inputs are only going to be good if you think that you can project with some degree of accuracy the future prospects of the company. But I read Bruce Greenwald's Value Investing from Graham and Buffett to Beyond probably 4 years ago, and I just picked up the new copy, which I'm planning on reading. I know he talks about the earnings power value there of a company as opposed to valuing it based on discounted cash flows. So I think DCF does have its place. It's just a matter of how strict you are with it. Trying to tweak it, trying to massage it to make it fit your thesis is always a bad idea. That's why I'm being super conservative. And one of the things that Frank does a lot with his videos is he's very conservative with his numbers. And even in that case, if you have a super high margin of safety, then that's some time to get interested in the company, I think. But yeah, those are a few thoughts. But I need to revisit Greenwald's approach as well, because I think yeah, he has some truth to what he's saying there too. Any thoughts on Dorsey buying eBay on last quarters? Seems fully priced for the moment. What was his ad there? Sorry, I probably should have a screen capture so you guys can see what I'm doing. But right now I'm pulling up Pat Dorsey's portfolio on Dataroma. And he added about 18% to his PayPal holdings. So that makes up about 12% of his US portfolio. PayPal isn't, oh, I'm sorry, did you say PayPal or eBay? But it's the same thing, same exact addition ratio. That's interesting. Where were we? eBay. Yeah, eBay does look expensive to me. I've spent not that much time on it, but it surprises me to see Dorsey. A lot of Dorsey's companies seem overvalued to me at first glance. So he has some variant perception about these companies that makes him willing to add almost 20% to his current position in the company. So I don't know exactly when he started that. You know, if he even added or started his position in eBay fairly recently, then I'd start to get really interested in. If you have any good write-ups on eBay or anything, feel free to send them my way. But yeah, it's certainly based on just looking at their financials, multiples, things like that. It does seem pretty expensive, but yeah, these are just a few thoughts. Tim heard about Pabrai bought 3 new Turkish companies from Brad on the Punch Card Investing podcast, which, by the way, is an excellent podcast. You should definitely check them out. You know, Brad is the ultimate Monish Pabrai cloner, so I would trust that his information is accurate. Maybe I'll reach out to Brad, see if he found an interview with Pabrai where he recently talked about that. Yeah, but Brad can find out information. He's a top-notch investing sleuth, I'll say, a detective. So big ups to him. I love his channel too. So if you aren't subscribed to him, which I can't imagine that any of you aren't, definitely go check out his channel as well. He's got a lot of great insights and resources for investing. So Jerry asks, do you think Alibaba is buying back shares aggressively? I haven't seen any filings related to that, like Tencent shares. Well, I can only speculate about that. I would hope so. If they have any confidence and they think that they don't have the opportunity to deploy the capital at higher rates of return in other areas, then buying back their stock is probably a really good idea at these price points. I would imagine, I mean, they did recently buy back shares. I forget the exact numbers, but I wouldn't be surprised if they continued to do that. Now, it might not be, you know, in huge chunks or anything like that, but seeing them nibble back at their stock at these prices makes sense to me. But, you know, we'll see. Tim, Brad talked about Pabrai partnering with investor Matthew Peterson in a company called Talis Capital. The company will focus on mispriced Turkish equities. Okay, so that is very interesting, actually. You don't know much about this and would like to learn more. Okay, yeah, me too. That's definitely something that I'll be sure to look into. Matthew Peterson is an investor who's invested in companies like the Daily Journal Corporation, and he also has an investment in Prosus, I think, either Prosus / Naspers, or maybe both. And yeah, Pabrai, if you have, you know, been paying attention to his portfolio changes or, you know, his talks or anything, he's been talking a lot about how much he admires Naspers management. And it's been a bit of a surprise to not see him actually buy into either Tencent or Naspers or Prosus the past two quarters, I think 2 or 3 quarters. But it is interesting to see him team up with Peterson. I'll definitely be doing some more research about that, and should let you guys know in another video at some point, because anything that Provide does kind of goes to the top of the list as far as investing moves or anything like that. Yeah, that'll be interesting to see what kind of, how much assets they're going to try to gather there, because I know one of the regrets with Provide's recent investment in Turkey is that he owns 30% of the company, but it's it's maybe 5% of his overall portfolio. So it's not going to move the needle a ton unless this 5% grows to, it becomes a 100 bagger or something, which I think he's said that he thinks that ASOS can become the 100 bagger, the first 100 bagger for Provide funds. So we'll see. But Tim, thanks a lot. Huge value add there. Jack asks, have you looked into NetEase at all? What do you think about the video game industry overall in China? Okay. I'm not too familiar with NetEase. Let me pull that up real quick. Yeah, so I feel like I read about this company in the book, Alibaba, the House that Jack Ma built. For some reason, this is ringing a bell, but I don't know too much about it. But that's definitely one to put on the radar, so I really appreciate that. And as far as the video game industry overall in China, well, I think that I don't want to start preaching or anything, but I think that the restriction for the youth, the 3 hours per week restriction, is kind of not so good, to be honest. But I think most of China's so when we talk about gaming in China, we're mostly talking about Tencent, in my opinion. I mean, they're the largest gaming company in the world by revenue. So I think one of the key things for these companies is that they're going to have to continue to expand internationally. So I don't know about, I mean, gaming is the largest media, media segment in probably the whole world, probably at least the United States. I would imagine it's growing rapidly. But as far as homegrown industry, it's going to be, I would imagine it's going to be kind of tough to build that relationship if you want a child to be playing only 3 hours a week, it's going to be hard to build this relationship with that customer for the rest of their life. So a company like Nintendo, for instance, where they can engage freely throughout the world for their whole lives, and then that Nintendo is going to stick with them for the rest of their lives and then the rest of their kids' lives. So, but they do have some excellent games, extremely popular games, and some investments in American game companies like Epic Games, which is the creator of Fortnite. So, yeah, it's troubling, but I don't know the demographics of the industry that well in China, especially. But if the adults, age 18 to 35, which I think is pretty similar in the United States, being the main demographic of video games, then I think that people will still continue to spend a lot of money on League of Legends, downloadable content, and the other mobile games that are obviously going to continue to come out. So I don't think, hopefully it's not too affected, but that's not something I'm going to be able to predict. Sorry, that was rambly, but Jay, Baba only announced buybacks in earnings report, I think. Yeah, that makes sense. How could they effectively enforce the 3 hour limit? Yeah, the only way, I guess, would be to either have online tracking. Yeah, I think the world of video games is going more and more to these collaborative social networks of games. So we see games like Roblox or Minecraft, or Grand Theft Auto 5, which is a game that's going almost a decade old. But you build these social networks within these games, and even games like World of Warcraft, where these MMO games, where you're basically tied to this universe with a bunch of friends, and there's a lot of great things that you can spend real money on in these worlds. I think that's one of the powerful attractors for games. I myself have always been more interested in multiplayer games. I think playing games with other people is a lot more fun, but yeah. Yeah, face recognition. I mean, if they want to enforce it, they will find a way. There's not as much concern about what we might find in the United States, for instance, as violations of privacy, from what I can tell. So it would be nice to live in a GTA 5 metaverse. Well, yeah, until you get robbed or something. Yeah, GTA, that would be a very dynamic universe, to say the least. There are even there are a lot of servers where they do role playing and stuff, so you basically have to act as your character, which I find pretty intriguing. To me, it's just the staying power of games like this is just incredible. You can spend a decade of your life in the world of Grand Theft Auto, for instance, and you have your real life, and then you have your virtual life, which is every bit as real as your real life. But the actions in those games won't pay the bills or anything like that. So that's where that delicate balance comes from. But yeah. Do you do these lives? Oh, I've done 2 of these live streams, and they've both been kind of impromptu. So if I have the house to myself, is usually a good time for me to do this live stream, because my computer is actually set up in the living room right now. It's sort of a makeshift, now permanent work from home situation. So it's really disruptive if I want to do something like this, at any old time of the day. So I have been thinking about making a dedicated weekly stream of some kind, where we can do this for 30 minutes, an hour, whatever the interest is. That's something I'm still thinking about, Jay. But yeah, I'll be sure. I'll probably do a community post if I decide to make this a more permanent weekly thing. But it'd probably be maybe during the week. So yeah, that's that. Harish asks, have you looked into Nintendo after the new NSO expansion changes? Are you talking about the new subscription model for the Nintendo 64, the Sega Genesis, and then it also includes the new Animal Crossing DLC? I definitely stay up with Nintendo. I mean, I love that. I love that company. I'm a fanboy. I mean, seriously. So that's one of my biggest concerns with Nintendo, is that I would be blinded by my actual love for their products. But I think so. The original subscription is maybe $20 per year, and you get access to online play and cloud save features and things like that. It's not that robust, but yeah, as Harris says, they have 32 million people locked into the subscription service. So if you want to play online games, you pay a pretty minimal fee for, especially gaming services out there. PlayStation Network is a lot more expensive than the Nintendo Switch Online. But now they're turbocharging that with the addition of Nintendo 64 games, some of the best N64 games, some of the best games of all time, in my opinion, including Super Mario 64 and Legend of Zelda: Ocarina of Time and Banjo-Kazooie, for instance, Sonic the Hedgehog on the Sega Genesis part. So they're supercharging that with, this is basically weaponized nostalgia, is one term that I've heard thrown around when talking about Nintendo. So they bumped that $20 price point up to $50 per year, which is still, I mean, that's very reasonable for a service that that offers you access to all the best games of all time. Basically, we got Star Fox. I'll probably pay that. I use their online service, and even if I need to use it, once a month, I'm still going to pay for it. And I definitely want to delve back into those old games. Now, it remains to be seen if $50 is going to be a reasonable price point for the rest of the world and not just their super fanboys. But I think that we're going to be surprised at how receptive the world is going to be to that price change, and probably people won't bat an eye, and they're just going to pay for it. If I had to put money on it, that's sort of the result that I would expect. We saw the new OLED version of the Switch just got released, and you can't buy it anywhere. And this probably has to do with some shortages for the components that are actually in the product. The most vocal people are the critics and the fanboys. So the critics are always going to complain that, the Switch doesn't support 4K. The Switch, it's old hardware at this point. But it's a huge hit in Japan, and obviously in the United States, you can't buy it anywhere. So I'm constantly surprised at the dedication to Nintendo's products. That's all I'll say. I'm bullish on the company, so take that for what it's worth. John, were you surprised when Berkshire sold Costco last year for Kroger? I've come to look at it lately, and I can't wrap my head around the reason he did it. Well, I think at the annual meeting this past year, Warren Buffett said that it was probably a mistake for them to have sold Costco, and Charlie chimed in right away and said, absolutely, it was a mistake. It was a huge mistake. And I don't know. I mean, maybe Buffett is seeing that there's going to be some erosion within the business. I wish one ability I wish I had above all others is to be able to peek directly into Buffett's head. Kroger is a much smaller, well, not much smaller, but it is a smaller retailer. And yeah, needless to say, I was shocked, but there's got to be some value opportunity cost ratio that they're doing there. It is just surprising because of the mantra of, buy and hold forever, basically. They would much rather hold on to it for as long as they can, unless something is fundamentally wrong or changing with the management of the business or something, as we saw with Wells Fargo. Buffett sold out of that within 2 quarters after the whole fake accounts fiasco and things like that. So I don't know. It's hard for me to see anything fraudulent or anything like that going wrong with Costco. And as far as I'm concerned, they still have room to grow because they barely have an international presence. So not that they need that to continue to thrive, but anyway. Ignacio, would Probri thinking of a 10-bagger on Seritage? Seems he bought at $5 or $6. So at this price, it could still be a 3 or 4x. Yeah, Probri is sitting pretty on Seritage. He said that he bought that at the depths of the COVID pandemic crisis back in March of 2020 at $5 or $6. So any way you slice it, he has a pretty significant capital gains just waiting there to be unleashed. But the thing with Seritage is I think he believes in the very long-term trajectory for this company. I'm not an expert on Seritage, but he has talked about it being potentially a part of the infrastructure of the United States at some point in time, which I think he has extremely high hopes for it, and he might be biased in that fact. But at the very least, I don't think he's going to be losing any money on it. So it's definitely possible that it could be a 10-bagger. I haven't run the numbers, but I know that Brad Callender and Tom, Investing with Tom, they have some great videos on Seritage. But yeah, I don't see why it couldn't be a 10-bagger. I'm hoping for it to be. I'm a physicist, right? No, I am not a physicist. I am a software developer. Very far from physics. But on that note, have I ever thought of working for Renaissance Technologies? No, I haven't. They're the quant shop, basically, algorithmic trading. I haven't. I've thought of ways that I could potentially do my own thing, personally. But to be honest, I don't find it that appealing. I think the joys and also the outperformance come from actually understanding real businesses in the real world. Um, I don't think I have any expertise when it comes to writing algorithms that are going to outtrade, huge firms like Renaissance Technologies. And I'm not going to go work for some place that specializes in that. I'm not going to go work for an investment firm. It's pretty much going to be my own thing or nothing. That's pretty much my approach to life right now. The goal is to escape the 9 to 5. So while it would be interesting to actually learn from them, just not something I'm interested in. Harish, it seems like they kind of, sorry, I skipped ahead to that. Yep, 32 million people locked into the online Nintendo Switch online subscription service. Yeah, and either they're going to increase the dollar average of each user. One outcome is that they might lose. Well, I don't see how they would lose existing subscribers because you don't have to upgrade to this new service. If they forced you to go to this $50 subscription service for the Nintendo Switch online system, that might be a problem. But they're giving you the option, so I can only see benefits for them. It costs them nothing to reproduce these games digitally. I mean, they're slightly upscaled, I think, but it's literally like Disney back in the day. You take the film out of the can, convert it to a VHS, basically no cost. And same thing for DVDs and now streaming. No incremental cost for reproducing this same content that they own, some of the best content in the world. Matthew Smith asks, what's your view on XRP? I don't know about XRP, to be honest. Let me check that real quick. Is this a crypto? Is this a? I'm not sure what XRP is, to be honest. Is it a specific cryptocurrency? Is it a tracker of coins? Sort of a. If you want to give me a little bit more about information about what XRP is, but yeah, I'm not huge into crypto, to be honest. I think it's fine if you are. It's just not something that I've spent a whole lot of time on. I think it's really interesting, that's for sure. But I'm having my one hitch is that I have a hard time figuring out what the economic value of it is. So that's an ongoing battle for me. But yeah, it's an interesting space. a lot of money going into there. Okay, so cryptocurrency cross-border payments. Research XRP and Ripple. Okay, yeah, that does sound intriguing. My one question would be, why can't somebody else do this exact same thing? So that would be my first question going into XRP. Do they have some advantage that makes them more powerful than the next guy? Okay, good on you. Thanks. I break. Appreciate that, man. Jamie Miller asks, what are your thoughts on taking smaller speculative bets on companies like SRG? I'm a value investor, but taking the occasional very limited gamble on a company appeals to me. I'm guilty as charged. I'm not opposed to it. I mean, speculative, I don't know. I like to understand a little bit about the company, but I mean, even if it's less than 1% of your portfolio or something, if you want to have a tracker position in a company, I think that's a fine idea. I mean, if it's going to end up taking up mental space, then that could be a problem, because you might be worrying. You put unequal worry into a company that really isn't going to have much of a financial impact. On the other hand, it is fun to sort of speculate in these companies that you might not, understand very well. But that would be my main concern, is it taking up mental space, even though it's not going to make a huge financial difference either way, up or down. Even if you have 100, if you have 1% of your portfolio, even if it's a 10 bagger, it becomes a fairly large size, but it's not going to make probably a life-changing impact on you. So that's the pros and cons there. Am I happy in life, and what's my purpose? Wow, getting deep there. I love what I do for a living. I love the fact that this outlet here to talk about investing, which I think it's so important. Financial literacy, the ability to understand and continue to learn. That's really the thing that I love most about investing. Actually, is it's an excuse to continue to learn. And in my day job as a software developer, I also just have the excuse to continue to learn. It's technical. Investing can be technical as well, but it's also very qualitative and free flowing in your approach to how you tackle problems. So yeah, that's a great question. My purpose. Yeah, that's one thing that I have struggled with. I've been more focused on trying to sort of achieve this financial freedom, but a lot of people say that even if you reach financial freedom, you're still stuck with yourself. But yeah, my main goal has been to just achieve control over my time, basically. That's my purpose right now. It's kind of selfish, but eventually I really enjoy this because I'm learning a lot. And if I can provide value to anybody, maybe just teach you one little nugget in a video, then if I help one person, then it was worth it to make that video. And that might start somebody on a journey to lifelong learning, which that is sort of the return on life that I'm looking for. Okay. I'm saying 32 because it's a great deal if you want the Animal Crossing expansion, which has about 32 million-ish units sold. Oh, I got you. Yes. So back to the Nintendo Switch Online. Yeah, I think everybody who's still playing Animal Crossing is absolutely going to upgrade to this next tier. And some people are saying that, wow, you get this Animal Crossing bundle, but I don't even play Animal Crossing. Why would I want to spend $50 for just these old games? Which, by the way, people are going to pay that. But I think future DLC is going to be bundled into this price as well. So maybe for the next Breath of the Wild game, they might tack on some of the DLC onto that subscription to get new users onto this higher tier. And one thing about that is that it's very unlikely that you're going to downgrade your subscription. I don't know. So very cool. There are a lot of J's in chat. That is true. Okay, Matt. Yeah, I will give that a shot. I'll check out his channel. Thanks. Yeah, I'm always interested to learn more about crypto, even though it's not really something I put my money into. I think, it's not a waste of time by any means. So Tim asks, can you look into China Mobile briefly and give us your high-level opinion? Okay, sure. HKG. I'm signing into ticker right now. Just bear with me here. Ticker 941. Okay. Sure. Yeah. So this is the type of thing where I definitely want to have my screen cap on next time. But yeah, right now I've pulled up China Mobile Limited's ticker page. Looking at their operating history, they've been around, but they've been public since 2011. Market cap is, let me switch this over to US dollars. Market cap is $128 million. Oh no, $128 billion. Wait. Oh wow. China Mobile Limited provides telecommunication services in mainland China and Hong Kong. Its businesses primarily consist of mobile voice and data business, wireline broadband, and other information and communication services. All right. First off, I will tell you that this is not going to be something that I understand too well. I don't really even understand the communications industry in the United States, and having it removed into China also might make it a little bit more difficult. One thing I will say is that they have a nice net debt position. So I like their capitalization, very little debt, which is very, very important, especially for a company that I'm assuming is very capital intensive. So that's kind of unique, actually, to see that. Looks like their income has been pretty stagnant. Their cash flow per share is not too attractive at this point. So they've got the LTM is 95 cents per share, cash flow per share, and their current share price is $6.26. But this is probably a company that, unfortunately, I would not spend too much time on, Tim. It's, yeah, a little bit out of the circle of competence, as well as I've got exposure with Alibaba, and I think that might be enough for now. So, but maybe if you want to share some thoughts, you can DM me on Twitter or anything, and we can continue the discussion there if you have any questions that you're wondering about. MS asks, you need help reading 10K reports and cash flow statements. Any book advice? Book advice. Let's see. I don't know if. Well, one book I might recommend is one called Financial Shenanigans, which is kind of things to look out for that are bad. Let's see what happens when you do how to read a financial statement. I had something pulled up on my phone that looked like it was going to be a pretty good guide. This is something that I've sort of just learned through. I can't really remember a specific book. I mean, I took a basic accounting course in college, but it would be just something that. Here, I'm going to post this in the chat. This is actually the first Google result, but it's from Harvard Business School. And it looks like this is a wonderful resource that I would definitely check out, and it's free, so you don't even need to buy a book, but it has specific advice about going through the balance sheet, going through the income statement, going through the cash flow statement. But one thing I would definitely recommend is to sort of read through the Warren Buffett letters for Berkshire Hathaway. He gives a lot of advice about accounting. Read through Peter Lynch. I've heard he has great insights about accounting as well. But to me, it's just been something that comes through practice, unfortunately. Over time, you sort of piece together what's important here, what's not important here. Another good thing to do is probably just read people's write-ups and analyses of companies. They'll have financial information in there that they think is relevant, and that might give you some ideas about what you should look at going forward as well. How many doublings are left before you achieve financial freedom? The tricky thing about financial freedom is that when is enough? Probably a couple more doublings. If I'm going to be honest about a place where I can, have control over my own time, full time, no BS, no lying to myself, so. But yeah, a couple more doublings until I feel pretty comfortable that I might not need a day job but it's not necessarily about the doublings, because if I replace my current income stream with another income stream, say from this channel, or perhaps I'll make some product, or write a book or whatever. There's a million ways to make money online. So if I can replace my current income with money online, then I would deem that close enough to financial freedom that, yeah, I'd be pretty happy with that. because the point of financial freedom is to find something that you would do for free anyway. And so things like this, learning and talking about investing, is something I would do for free. So Greenblatt has some recommendations about financial literacy self-learning in his book, You Can Be a Stock Market Genius. Okay, yeah, it's been a while since I've read that book, but good. That's a good call out. I'm sure there's plenty there. Financial Management for Dummies is surprisingly good. Yep. There are also accounting courses on Coursera. Back on that subject, I think there are some basic accounting courses on Coursera or Udemy or something, which I think would be pretty helpful. I mean, it's a low commitment. I'm sure they're probably free or whatever. So I'm having a hard time of thinking of a book necessarily, though. And reading a lot of investing books will teach you about what to look for in these statements as well. So yeah, I think Buffett has a lot to teach us on that as well. France, hello. How you doing? Thanks for joining. You'll go out you have 2 doublings left, but you'll go out on $1 billion note. Hey, we're all trying to get there, aren't we? I wish you the best of luck. Hopefully, I mean, I'm sure you'll get there, and I hope to join you there. $1 billion would be nice, but that's more than enough to care for my family and any generations. That one goal is I really like Warren Buffett's framing of having kids having enough money so that they can do anything they want, but so they can't do nothing. So you can't spoil your children, but you can give them all the success in the world, which is a really appealing idea to me. 3 doublings, aiming for being done at 56, 20 years. Hey, here we go. It's the slow and steady grind that gets you there. If I had invested in Bitcoin back in 2015, I'd be there, but I didn't get so lucky. But to be honest, Prabrai and Munger might have sped up the process for me with Alibaba. Even if it's not Alibaba, it's going to be whatever you've learned from them is probably going to help you grow faster than the average person, I would assume. If we follow their principles, I think we're going to be in a pretty good situation. I mean, you can achieve financial freedom by investing in the S&P 500. So, but yeah, I'm still trying to increase the income as well as the return. So I've got 2 levers that I'm pushing right now. Any thoughts on CVS or Walgreens? Which one could be a multi-bagger according to you? France, unfortunately, I don't really have an opinion on these companies. I don't even know their market caps. Let me see. CVS is sitting at about 113 billion. Walgreens at about 42 billion. Is there any chance that CVS takes over Walgreens by chance? I think they are adjacent businesses, I think. But that's just my surface level view as a customer of both of the businesses. The convenience store / pharmacy aspect, I don't know if there's anything on the back end that they do that is boosting profits in any way. I mean, they're dominant in the United States for sure. I mean, those are really the only 2 pharmacies that I see, at least here in Chicago or anything. So, sorry, friends, I don't have a better answer or reply about that. But that's an industry that's the whole healthcare industry is not something that I am seriously exposed to or by any means knowledgeable about. So if anything, you would probably be able to teach me because, yeah, you're the one asking about the companies in the first place. So sorry, friends. Tim, this is ridiculous. We've got a super chat. Wow. 5 big ones. Thanks for all the good content, CJ. Well, I am very humbled by this donation. I really appreciate that super chat. Um, thanks, thanks for that. Trying to keep it up, trying to provide a little bit of value for anybody. But the thing I really enjoyed these Q&A sessions because you guys are teaching me a ton so far. We've already touched on ASOS, we've touched on some cryptocurrencies, got me thinking more about Alibaba and plenty of companies that I've never even thought about, like CVS or the one that you suggested, Tim, which is the telecoms giant in China. So sure, France, I'm sure I can do a little bit of a deep dive into these. It would be interesting to get a comparison even of the base characteristics of each business, because honestly, like I said, I only really know the retail/pharmacy aspect of it. John agrees with you. He says Walgreens is a good price right now. It's high on the watch list and it's close to a buy. So yeah, one thing I would be interested in, of course, is any write-ups on these companies, but if any super investors are also invested in these companies, people that come to mind that would be, Seth Klarman or something like that. How many doublings left after the super chat? Well, I'd say we're down to about a half of a doubling. So, I mean, it's a huge, huge, huge donation. Everything really helps, and that's makes me super grateful. It's going to go right back into the YouTube channel. So, yeah, thank you so much. Not a multi-bagger, good return on investment. So yeah, that's a possibility. I mean, they're pretty big companies. Question is, how much can they grow? How much can they boost their profits? Any more thoughts on SEMrush or Smartsheet? I haven't looked at SEMrush since, or Smartsheet. I've been trying to think a little bit about their moats, because they look expensive to me, but there might be some growth numbers that I'm not seeing that I mean, I haven't done, I haven't done very much research on it, to be honest, but Pat Dorsey has a lot of money in these companies. So I can only conclude that he's seeing something there that the market isn't seeing, such as their ability to lock into companies and continue to grow those contracts that they have with existing customers, which I think is very likely. There are probably a lot more companies that don't use any sort of service like they provide. So it could help them. The market might think that the company is going to slow its growth, and Dorsey might have numbers. He might be privy to some information that isn't going to indicate from prospective customers or something like that the growth isn't going to go anywhere, and it might even increase. So, yeah, I really love the software as a service business. I think it's probably the most powerful, one of the most powerful models out there because of the capital intensity or lack thereof. But yeah, still a little bit concerned about how much money they're actually, well, especially in Smartsheet's case, how much money they are spending on advertising research. But we were talking a little bit earlier in the chat about Amazon and how they were kind of able to grow and cement themselves as sort of the leader without too much competition. I'm wondering if it's a similar thing with Smartsheet, if they're kind of going to be able to take over this productivity suite market and get a lock in there with most of the companies that might kill a lot of other competitors. But yeah, those are some thoughts. Michael Burry owns CVS. Okay, that's awesome. Hopefully it's one of his long positions. Burry does a lot. He's got a lot of positions. He's kind of hard to track for me personally. But I do look at his portfolio. It's pretty interesting. Ignacio says Wix seems better priced right now. Okay. Yeah, Wix is still a company that I haven't looked into yet, but I think it's going to go along the same lines as SEMrush and Smartsheet. asset light. Probably still going to look expensively priced, but there's a lot of qualitative digging to do with these software if it's not showing up on the balance sheet or on the financials. Sorry. If you like the direction the Daily Journal company is diversifying their core justice software service, have you looked at it? No, I have not looked at it. That's one of the next companies up on my list. I got really intrigued when Guy Spear bought into it a couple quarters ago. I think he has maybe a 2% position or something. But and we also mentioned Matthew Peterson earlier, and I think he has a pretty good video or I'm hoping it's a pretty good video about his thesis on the Daily Journal. But it depends. So one, it depends on how much of the market they have for this court / lawyer justice software business. If they have a pretty good stranglehold on that, then they might find that they're going to get more incremental returns, expanding their offerings. But I don't know too much about what their offerings are. So definitely going to look at that one, John. Super Loco Taco, updated thoughts on Nintendo. We have been talking about Nintendo a lot during this live stream. So once this video goes live, maybe you can skim through the video and look for the parts about Nintendo. But we just touched on the potential for the new Nintendo subscription online tier with the new $50 offering, $50 per year offering, but I will say in summary that I am bullish on Nintendo. It's a recent buy for him. Oh, CVS is a recent buy from Burry. Okay. Hey, after dinner investor, I've heard a lot about you, but I've never met you. But I've seen you on a bunch of Tom and Frank's videos and on the podcast with those guys, the Punch Card Investing podcast. Wanted to say, appreciate your analysis and videos. Thank you so much. I really appreciate that. Looking forward to maybe talking with you at some point. Thanks for checking in. Thoughts on Facebook? More to come on Facebook. I might share my overall thesis for Facebook. That's definitely a company that I'm interested in. And what I like is that the price just decreased. So that's absolutely a company that's pretty high on my personal watch list. I think the business model is incredible. And Zuckerberg is, once in a lifetime type of manager and business person. So I'm very excited that he is so young still, and he's got a lot of long runway left. Thoughts on Facebook also. It's good from an antitrust standpoint because if they get broken up, they're worth more broken up. So I'll leave it at that. All right, I've got to probably wrap this up pretty soon, guys. My voice is kind of to go. I'll take these last couple questions. This question is, Bruce Greenwald has some cautions regarding investing in China. It's a rapidly growing market, threatens moats because the barriers to entry are low. Now entrants can find enough customers to survive. New entrants can find enough customers to survive. Worth considering as the bear case to stay rational. Oh yeah, absolutely. I mean, same as anywhere, really, honestly, but that's a great point. Yeah, if your total addressable market continues to expand, then it's possible that, for instance, Alibaba, their presence in the e-commerce world is going to continue to decline. And I mean, we're kind of seeing it decline a little bit, but that's a very good thought. It's true. And there might be irrational parties in play that they don't care how much money they're spending to gain market share or whatever. So one example we see that not just in China, but in the United States is the food delivery business. It's a completely irrational circus right now, just hemorrhaging money left and right. Grocery business is sort of that similar thing. So yeah, absolutely. Yeah, barriers to entry that's a major point of Greenwald's sort of strategic framework. And he talks about that in Competition Demystified, which is a wonderful book. So yeah, thanks for that. All right, last two questions, guys, from John and then France. I've looked into Daily Journal software a bit and Constellation as a rival, which turned me off because the company is very good in the field to compete. I definitely want to look further into it. Yeah, I mean, Constellation is one of those ever-growing, it's one of the well-loved companies within the value investing community. Unfortunately, I'm not an expert on that company either, but it's good to know. Anytime you're competing with a company like that, you better watch out. So, yeah. But I'm sure with Charlie at the helm, they're going to make some pretty rational moves at Daily Journal. And I think the management team, even without Charlie, is going to be a success from what I've seen at the Daily Journal annual meetings and stuff. But yeah, continue looking. Okay, if France asks if I've missed any content from us live about Seritage, I will watch it again later. Do you own Seritage? Would you buy it now at this level? What is the level? I have a very small position in Seritage, but it's one of those positions where it's sort of a tracking position. So it's not a huge high conviction bet. The main reason why I'm interested in the first place is because of its presence in portfolios of Fabri and Guy Spear mainly. So from what I've seen from Fabri and his analyses in public, I think that's it's probably a decent price at this point, but keep in mind that Fabri is speaking from an entry point of about $6 per share. So haven't really seen him add much lately at these prices. So that would be something that I'm considering. But yeah, so I would recommend, again, what we talked about, Brad Kellner and Investing with Tom. Both have done some pretty great collaborations about Seritage, and they sort of keep me in the loop about Seritage as well. But it's a tough business, and it declined probably for good reason. There's a lot of fear about the prospects of retail going forward. So they're doing a major transformation with these big live work centers. I find it interesting that probably the main drivers are going to come from a handful of properties. I think I have a kind of older video where I talk about Guy Spear's thoughts about Seritage, but yeah. So I'm just going to keep it pretty small for now. But yeah, it seems like a 5-foot hurdle instead of a 1-foot hurdle. So yeah. Anyway, okay, guys, I've been live for an hour and 20 minutes, so I think I am going to give my voice a rest. Maybe try to record another video. I want to go through another one of Nick Sleep's letters, so I think that might be next. But I've got a lot of excellent companies to look through from all of your suggestions here. And I want to thank Tim again. If you're still here, thank you for the donation or the super chat. Big ups to you, man. I see you in my videos all the time, commenting, watching. Thank you so much for your support, and everybody here. Thanks for joining. I had a great time, and I will see you in the next video. Oh, and if you did enjoy this, can you please comment if there's anything that you want me to cover in an upcoming video that you didn't get a chance to ask in this, then we can add that to the list as well. So thanks a lot.